Welcome back. Let's talk about crude prices now, where we have seen yet another 4% decline overnight. And with that, in the month of November, from its highs, we're down by nearly 12 to 14% for both the crude varieties. Joining us to decode that is David Lennox. He's analyst at Fat Profits. David, hi. What a volatile month this has begun with. Nearly 3 to 5% of a movement becoming a norm on a daily basis. But I do want to start with what the G7 statements seem to be coming in as, with the cap price at around $65 to $67 per barrel is slightly higher than what the Russian Ural is trading at. In any case, how are you reading the price cap itself? And do you think by the time we see it coming in on 5th of December, it already would be a non-event?
Look, certainly we'd have to wait and just see what happens when that cap comes into play. We haven't really seen anything like this for some period of time, so one would suggest that the markets are going to be a little bit anxious about what is going to happen, and we will probably start to see the prices ease further back as the time approaches for the cap to be put into place. So we do expect that they will certainly follow through with that cap. And then it's going to be a matter of react or how the markets will react, because, as I said, we've not really seen this sort of activity before.
Oh, well, absolutely. And the other thing clearly is about China. We have been tackling those demand concerns for some time now, and especially now with the Chinese COVID cases rising with record highs, nearly 30,000 per day cases. How soon before you see the China story start to pick up in sense of demand?
Well, look, it's certainly difficult to determine, but one thing does have to happen, and China does have to look at its zero COVID policy and determine a better way to handle that particular pandemic. Perhaps not quite the same way as the Western countries have handled it, but they do need to go and certainly put more effort into vaccinating their population. Once that happens, then one could start to suggest that we will see a better picture of China perhaps opening. But at this point in time, one would suggest that that's still going to be some ways off, and we're going to see the disruptions as cities and localities and go into and come out of lockdowns. It's going to be a way of life that we're getting quite used to, but it is very, very disruptive, and of course it will have quite a considerable negative impact on the oil price.
You know, David, going forward, when you look at 4th of December and 5th of December, you have the OPEC meeting, you have the cap price from G7 coming in. We also have the European Union talking about a ban on Russian exports. Of all these three events, which one would you watch more keenly?
I think all of them, because they'll all sort of fall at about the same time. So one's going to suggest that the market's going to get very, very anxious about the events happening, and that's going to again put some pressure on the oil side to the down. On the oil price to the downside, and really it could be quite a difficult period. If the market does get a strong whiff of uncertainty in any of those events, then we could see quite a significant fall in the oil price. That's started to happen already. Throw in, as we've just talked about, the China situation and COVID, and we could see the oil price, and we've been quite a bull for the oil price. We could see quite a weakening in the oil price in the month ahead.
So what kind of a decline in prices are you anticipating from here on? I mean, as you said, we've seen already quite a sharp down decline there from $98 of a high in the month of November itself to below $85 is almost a $15 of a decline from November highs. Where do you see supports coming in?
Oh, look, we could probably certainly see another $15 downside. It really does depend just on how all those events are handled by the market. And if they're not handled well, and one would expect that that's going to be the case, then we could see certainly another $15 to $20 shed from the oil price. Yes, that's getting to quite exceptional lows, but we don't think it's going to stay there for very long, because if you have a look longer term, that we believe the prognosis for oil was quite weak longer term. But certainly we've started to see events happening that would suggest that it's going to continue to remain mainstream for some time longer than we anticipated. That should put some support under the prices. But in the near term, watch out for those events.
All right, so another $15 down from here would mean $70 for the Brent prices. I mean, that's quite a bearish view coming in there. But David, a word on natural gas as well, with the winters now starting, and it seems like a strong start to the winter in West. What is the kind of demand that we're looking at? Would the kind of inventories that Europe has summed up enough?
Look, we certainly think that Europe has probably at least got inventories to suffice through the winter, but that is going to be a bit of a touch and go because, again, we've not really seen this sort of situation before where they've had to go and build up inventories. Generally, all they've done is switched on a pipe and in comes the gas, but that's not going to be the case. That could leave the markets quite short when we come into the southern winter in the second half of next year, and fortunately there's not significant demand in the bottom part of the world as there is in the top, but it could start to put some pressure on the inventory levels and natural gas as Europe starts to work its way through all those inventories. It's going to be the replacement of them that's going to be important, so that could see natural gas prices really stay quite high for some time, and maybe especially into the second half of next year. It really does depend on just how far they go with the cap and how Russia reacts to the cap, and basically if we can see some completion to the war or some primary perhaps peace, the whole situation could change quite quickly.
Clearly, a lot of uncertainty out in the market, but clearly the crude oil prices can slip some more, but not natural gas, especially with the winters and the kind of demand that is rather anticipated. David, as always, thank you so much for joining us with that clarity on what to expect from the energy sector. But with that, it's a wrap on Halftime Report. Business Lunch takes all the action forward.